I am the Executive Manager of Intermediary Distribution for Hostplus. That just means that my role, I'm responsible for making it easier for professionals like yourselves to work with Hostplus on behalf of your clients. And as Mark mentioned, it is quite unusual for an industry fund and a very large one like Hostplus to be addressing an audience of SMSF professionals. However, today I'll be sharing some details of our self-managed super fund product and how this may benefit your client portfolios. Now, before I get started, just a very quick reminder that anything I talk about today is general nature, doesn't take into account your objectives or circumstances. And we always encourage you to refer to our PDS and TMD for further information. So I'm going to start off by telling you a little bit more about Hostplus. We have over 1.7 million members, and we currently manage over $110 billion on behalf of those members and investors. Several years ago, our teams created a solution suitable for SMSF investors, which is self-managed invest, or SMI as we typically refer to it as. Our structure enables Hostplus enables SMSFs to invest alongside the Hostplus fund and access our investment options. And we can do this because of the demographics of our fund. We have a relatively young member base, and so it means we can invest for the longer term. We have very strong incoming net cash flows. I think that was reported in an article earlier this week, in excess of $5 billion a year. And from that very large member base, it means that we've got the opportunity to identify the best investment opportunities and take a longer term outlook. We can deploy funds very quickly and take advantage of those opportunities. We also have the scale to negotiate better fees and terms. But I think the key is here, it also enables us to have a high allocation to unlisted assets. And we've got around 40% of our balance or my super option invested in unlisted assets. We've been investing this way for 15 or so years, and we're seeing the benefits play out with the long-term performance. And through SMI, SMSF investors can leverage our investment expertise and our scale, but doing so with a fairly low minimum initial investment of $10,000. But importantly, despite the high proportion of unlisted assets, our scale gives us the ability to maintain daily liquidity on those investments. So let's take a close look at our balanced option. As this is where 75% of member funds are currently invested. The pie chart really just shows how well diversified the option is. The investment is spread with around 76% invested in growth and around a 60%, 40% split between listed and unlisted assets. So this further diversifies the portfolio, and our scale allows us to access parts of the market such as venture capital and highly specialised unlisted managers that can't easily be accessed by retail investors. So unlisted assets have long been an important part of our diversified investment strategy, and that's because they behave differently to publicly traded or listed assets. They typically don't experience the same degree of volatility, and that can be seen on listed markets. And we invest in nation-building infrastructure projects, life-changing technologies, vital transport links such as seaports, airports, toll roads, renewable energy sources and industrial buildings, just to name a few. They're essential assets for our society both now and into the future. And if you think about your own portfolios, you typically have more than just shares and cash and bonds within. You're likely to have physical property, and for many online, probably personal businesses as well. And our fund and our investment approach is really no different. We embrace the full set of capital market opportunities. And whilst we still invest in listed shares, both here in Australia and globally, and cash and bonds, we can consider things like infrastructure, property, private credit, private equity, venture capital, with a really strong focus on good long-term returns. So let's just have a closer look at some of the asset classes. Now, when people think about or talk about property, they immediately think about office and retail, which have really been challenged over the last few years. but our property portfolio has morphed over the last 10 or so years, as shown by this chart. We are much more than just office and retail. We've expanded the portfolio into things like industrial, medical, health, residential, triple net leases. And as we've increased in size and scale, the portfolio is now much more diversified, with 60% here in Australia and around 40% globally. Many of these investments are inflation linked, and we do like things that are different. A really good example would be our recent joint venture through ISPT, where we invested in Borough Park, which is a very large land holding in Western Sydney, near the site of the new Western Sydney Airport. Now, this airport is government owned and is expected to be Sydney's largest airport over time. And because we couldn't buy the airport, this made sense for logistics and further industrial development. Now, we know that many SMSF investors access property either directly or through other means, and SMI is often used by advisors and trustees to improve the diversification of their portfolios by accessing assets that are typically unavailable to them as retail investors. Our infrastructure portfolio is broadly diverse and designed to give bond plus-like returns or investments into specific assets that give GDP-like returns. We like assets that have a monopoly, such as airports, Tullamarine, Sydney, Brisbane, Adelaide, and essential assets like energy distribution, poles and wires. But some of the more interesting emerging areas are digital assets such as data centres and energy transition, so effectively replacing carbon. Our preference is to use quality external managers rather than managing the assets ourselves, and we focus on that capital growth, cash yields, and take that longer term approach. And for us, I guess infrastructure is much more than traditional roads, ports and airports. Energy and energy transition presents opportunity for patient long-term investors like Hostplus. Governments have big budget deficits and they need help to decarbonise the economy. So they do look to the private sector to do this. And we will certainly consider these investments if we believe it is going to be in the best financial interests of members and investors. We do favour long life assets with good fee structures, and we like to hold them for a long time. An example of a less traditional asset is our investment in Tilt Renewables. It is Australia's largest private renewable energy business, and they can produce more than 1,300 megawatts of energy. It's 58 wind turbines in Silverton Wind Farm in New South Wales, can power enough electricity for up to 36,000 homes a year. And it's soon to be completed Cooper's Gap Wind Farm in Queensland, one of Australia's largest wind farms, could power up to 264,000 homes a year. These wind farms, plus Tilt Renewables' other projects such as solar, have the potential to generate enough total power to run up to 1 million Australian homes each year. Hostplus is one of Australia's largest institutional investors in venture capital companies. We've invested more than $3 billion into the sector in areas such as medical therapies, robotics and clean energy, always aiming though to provide members and investors with strong returns, and with these sorts of investments in accordance with our responsible investment framework and objectives. There are some really exciting venture capital companies that are based overseas that provide good examples of where we're getting in early. One of the more interesting of these investments is in the field of physics and engineering, called Fusion Technology. Fusion is based on the same process that powers our sun, so really harnessing that energy. Fusion energy technology has the potential to deliver renewable energy. Now, these projects or these companies we invest in are progressing well, achieving a lot of their critical milestones, but they are still in their early stages of research and development. But what we see is that this technology has the potential to be the future of energy production. And our objective is always firmly on delivering those returns for members and investors. There are two companies we've invested in, First Light Fusion and Commonwealth Fusion Systems. They both aim to harness the same energy, but they approach this differently. First Light Fusion is a UK-based company with origins at Oxford University. I'm not going to sort of go into too much detail around their approach in the interest of time, but very recently they demonstrated their ability to do what they set out to do, which is a really important result for them, and indeed the efforts to help move the world to a net zero fossil fuel emission environment. Commonwealth Fusion Systems is a US-based company with their origins at MIT, and they aim to harness the energy through high temperature superconducting magnets. They also announced a breakthrough in their testing last year, and we're just really excited to see just how much more our fusion investments can help accelerate the path towards commercial fusion energy. So those are just examples of what investors can get into when they're investing in our options. I think, though, it's important that I just go back to the overview of what does make us different, because we invest for the long term. Our manager relationships are very strong. We hold them to account. That really is a big part of our job, and we are happy to be an early mover into new areas, even when they can be complex. We are very active equity managers. We do want to do better than the markets over the longer term. However, our ability to manage and historically maintain a high proportion of illiquids or unlisted assets, combined with our history of being rewarded for doing so, means we have the scope to keep doing that, to stay unconventional. This here is are the investment options that are available in SMI. It's not the full investment menu from our industry fund offering, but that's certainly some of the more supported options by members. SMI is also different in that it provides access to infrastructure and property as standalone options, which we do see complementing a lot of advisors' client portfolios. And importantly, these options all offer daily liquidity and daily unit pricing. We do this by investing into what's known as a pooled super trust or a PST. It is a tax-paid investment, so it means the SMSF won't be assessed on the income it earns or any gains or losses as a result of the disposal of any units, and the distributions aren't paid but instead wrapped into the unit pricing and the performance of those options. And because of the tax-paid nature of these, we do have separate unit classes for the accumulation and pension environments, just to ensure the integrity of those relevant tax environments. I guess from a advisor perspective, we do have plenty of support through dedicated business development managers and specialised contact centre team members who can help both the direct investors and those assisted by advisors. We have a very functional online portal which enables you to create an account and also transact on behalf of clients. For accountants, they also have the ability to access that information. If Explain is used, we have integration through data feeds and the ability to start new accounts, as well as recently integration with NetWealth through their non-custodial arrangements. So where you're already using NetWealth for as your administrator of the investments, then this tucks in quite nicely from a reporting and administrative perspective. And I think what's really important is that a number of our investment options are rated by Lonsec to give that additional comfort. And for anyone who uses or industry funds for clients, then our accumulation and pension accounts do have the ability for fees to be deducted, and an online advisor portal so that information can be accessed. Now, I appreciate the time being given, and if you do want to learn more, please connect with our local business development team. We are happy to make a time to meet with you and your teams, and from time to time we also run specialist investment webinars and events. So if you connect with us, then you will you can receive invites to those sessions in the future where you can hear directly from our investment managers. I am going to leave it there. Thank you very much for your time, and we certainly look forward to supporting you and your client needs in the future.
Invest your super your way. Whether you're a hands-on investor or prefer to leave it to the experts, Hostplus has an investment option for you. Control over how your super is invested, that's a plus.